Hello everyone, welcome to my YouTube channel. Today we will discuss live market snipetact vertical bar March 7th, 2026, silver spot, $83.84/OS, vertical bar ATH $121.67, January 29th, 2026, vertical bar Feb, crash low $63.85, vertical bar recovery, plus 32% pattern, symmetrical triangle, 2H chart. Upper trend line $84, lower trend line $77, vertical bar worry $20, lower trend line $77, RSI 50 to 55. Managed money longs 5,472 contracts, near multi-year low, huge institutional dry powder. Breakout upside targets $92, confirmation $100, primary $121, 8H retest $136, Fib of O. Extension, breakdown target, close below $77.78, war $65, vertical bar, historical silver triangle, stat, 78% resolve with breakout, 14.7% AVG move, Hokuk, 0 o'clock, 0:55. There is a specific chart pattern forming on the silver chart right now that every precious metals trader needs to know about. It is called a symmetrical triangle, and silver has been trapped inside one on the 2-hour time frame for the past several weeks, since the February 6th crash low. The upper trend line of this triangle descends from each rally peak. The lower trend line rises from each recovery low. They are squeezing together, narrowing silver's trading range, compressing volatility, and building enormous pressure. As TradingView analysts have been flagging all week, this type of structure often leads to explosive expansion once price breaks decisively. But here is the question every trader must answer before positioning. When silver breaks out of this triangle, and it will break out, because triangles always resolve, is it going to be a genuine powerful rally toward 92, 100 and beyond? Or is it going to be a bull trap, a fake breakout that reverses violently and sends silver crashing back toward $65? Today we are going to answer that question using every tool available, the pattern rules from Edwards and McGee, the volume data, the momentum indicators, silver's historical track record with triangles, and the specific confirmation signals that separate real breakouts from fake ones. Let's get into it. Section 1. What is a symmetrical triangle, and why does it matter so much? 0:55-3:30. The symmetrical triangle is one of the most widely studied and reliable chart patterns in technical analysis. It was first systematically documented by Edwards and McGee in their landmark 1948 textbook, Technical Analysis of Stock Trends, and it remains as relevant today as it was 77 years ago. Here is how it forms and what it means. A symmetrical triangle develops when a market makes lower highs and higher lows simultaneously, meaning sellers are gradually losing the will to push prices lower, while buyers are also gradually losing the will to push prices higher. The result is a converging, coiling price structure. The upper descending trend line connects each subsequent rally peak, which is lower than the previous one. The lower ascending trend line connects each subsequent pullback low, which is higher than the previous one. These two trend lines converge toward a point called the apex. As price approaches the apex, the trading range compresses, volatility falls, and volume typically diminishes, the quiet before the storm. Then comes the breakout. When price finally breaks out of one of the trend lines with force, it signals that one side, buyers or sellers, has decisively won the tug of war. And critically, the energy that was stored during the compression phase gets released in the direction of the breakout, often powering a sharp, sustained directional move. Edwards and McGee found that approximately 75% of symmetrical triangles are continuation patterns, meaning they break out in the direction of the trend that preceded them. In silver's case, the trend preceding the current triangle was clearly upward, from the March 2025 low of $33 all the way to the January 29th all-time high of $121.67. That established uptrend means the statistical odds favor a bullish continuation breakout, but 25% of the time, symmetrical triangles break in the opposite direction, forming reversals rather than continuations, and 15% of the time, there is an initial false breakout before the true direction is established, what traders call a busted pattern or bull trap. Understanding how to distinguish a bull trap from a genuine breakout is the difference between a profitable trade and a devastating loss. That is exactly what this video is about. Section 2. Silver's current triangle. The exact setup as of March 2026, 3:36 o'clock. Let me describe the current silver symmetrical triangle in precise technical detail, drawing from TradingView Community Analysis, FX Street and BN Crypto reports published in late February and early March 2026. Silver's triangle began forming at the February 6th crash low of approximately $63 to $65. From that low, price started recovering, making a series of higher lows as buyers stepped in on each dip. Simultaneously, each rally attempt was being met with selling at successively lower levels, forming lower highs. The upper descending trendline of the current triangle connects the recovery peaks, the first peak near $84, and successive lower highs as sellers defended the downward sloping trendline. The lower ascending trendline connects the recovery lows, the $63 bottom, and each subsequent higher low as demand held at slightly elevated levels. These two trendlines are converging. Multiple TradingView analysts have independently identified this as a textbook symmetrical triangle, with one analyst specifically labeling it an XAGST triangle squeeze, writing, and I'm paraphrasing, that silver is currently trapped inside a well-defined symmetrical triangle on the 2-hour time frame, showing clear compression between descending resistance and rising support, and that a confirmed breakout above the triangle could trigger strong upside momentum toward the next key zones. FX Street confirmed this same structure in their analysis on February 18, 2026, describing the 4-hour chart as forming a triangle pattern with price action compressing and volatility narrowing, while noting that momentum indicators are beginning to tilt in favor of the bulls. The triangle's upper trendline currently sits in the $84 to $85 zone, converging toward the apex. The MACD per FX Street had already crossed into positive territory and remained above its signal line at the time of that analysis, a constructive signal. The RSI per FX Street was holding near 55 at that time, firming above the neutral 50 mark. The immediate upside resistance at the upper boundary of the triangle was approximately $80 at the time of FX Street's analysis, with the 100-period SMA at $85.69 as the next target if that level broke. Since that analysis, silver has continued recovering. The critical level that BN Crypto identified as the confirmation trigger for the full breakout remains $91 to $92. A daily close above that level would validate the full cup and handle structure and open the door to 100. The triangle's lower trendline support sits around $77 to $78. A daily close below that level confirms the bearish break scenario. Section 3. Bull trap or real rally. The 10-point checklist. 6 o'clock, 9 o'clock. Now let's answer the central question of this video. Is silver's symmetrical triangle breakout going to be a bull trap or a real rally? To answer this, we are going to use a 10-point checklist derived from the most authoritative technical analysis research on triangle breakouts, Edwards and McGee, Stock Chart School, Chart Guys, Altfins, Capital.com, and historical CFTC data, on silver triangles specifically. Point 1 is volume. This is the single most important confirmation signal for any breakout. Edwards and McGee and stock charts are unambiguous. A valid upside breakout from a symmetrical triangle must be accompanied by a significant expansion in volume, preferably 40% or more, above average. Low volume breakouts are the textbook signature of bull traps. Diminishing volume during the triangle's formation is normal and expected. It confirms the compression, but the breakout candle itself must show a volume surge. For silver, traders must watch for open interest expansion in COMEX silver futures, ETF inflow data, and volume bars on the spot chart at the moment of the breakout. Point 2 is the RSI reading at the moment of breakout. A genuine continuation breakout from a symmetrical triangle is significantly more reliable when RSI is above 50 and trending higher. Silver's current RSI per FX Street is around 50 to 55, constructive, above the 50 threshold. If silver breaks the upper trend line with RSI still above 50 and climbing, the breakout probability is materially higher. If RSI drops below 50 before the breakout, the bear scenario probability increases. Point 3 is MACD. A bullish MACD crossover that has already occurred or that coincides with the breakout candle is a powerful confirmation signal. Per FX Street's February 18 analysis, the MACD had already crossed positively into bullish territory, which is a pro-real rally signal. Point 4 is the breakout candle's close. A genuine breakout closes strongly near its high, with a full-bodied bullish candle. A bull trap often produces a candle that briefly pierces the trend line but then closes back inside the triangle, or closes with a long upper wick, showing rejection at the breakout level. Traders must wait for the daily or 4-hour candle to close before acting on what appears to be a breakout. Point 5 is the retest. After a genuine breakout, silver will often return to test the broken upper trend line, which now becomes support. If price finds support at that level and bounces, the breakout is confirmed. If price collapses back through the trend line and closes back inside the triangle, the breakout has failed. The return to the apex zone is well documented in the academic literature and is actually an excellent second entry opportunity when the pattern is genuine. Point 6 is the prior trend. In silver's case, the prior trend is unambiguously bullish, from $33 in early 2025 to $121.67 at the all-time high. This is strongly pro-continuation. Edwards and McGee found that established prior uptrends dramatically increase the probability of a bullish continuation breakout. Point 7 is the fundamental backdrop. Silver has a 6-year supply deficit, record industrial demand, and COMEX inventories at historic lows. This fundamental picture is the opposite of what you would expect to see if a bull trap were setting up a reversal. Point 8 is COT positioning. As of the February 17 CFTC report, Managed money net longs are at just 5,472 contracts near multi-year lows per B in crypto. This is actually a strongly bullish contrarian signal. Bull traps typically happen when speculative positioning is overcrowded, when everyone is already long and there is no one left to buy. At current COT levels, the institutional dry powder for the next bull move is enormous. Point 9 is time, and the apex. A breakout that occurs roughly halfway to two-thirds of the way to the apex is the most statistically reliable. A breakout too close to the apex is often less significant. The current triangle appears to be in an appropriate breakout timing window. Point 10 is the broader macro context. Silver is not breaking out in isolation. Gold is near all-time highs. The dollar remains under pressure. ETF inflows into silver are positive. Geopolitical tensions in the Middle East remain elevated, supporting safe haven demand. The macro backdrop is significantly more favorable for a genuine upside breakout than for a bull trap that collapses into a reversal. Bull trap versus real rally. 10-point confirmation checklist. Silver, March 2026. Signal factor bull trap, fake breakout. Real rally, genuine breakout. Volume on breakout low, declining volume. Surge 40% plus above average RSI at breakout. Below 50 or dropping above 50 and rising max ED. Signal negative, no crossover, bullish crossover, confirmed breakout. Candle weak close, long wick, strong close. Near high retest behavior fails to hold breakout level. Bounces off broken trend line. Prior trend downtrend, no clear trend. Established uptrend preceding fundamental backdrop. Weak, no support, supply. Deficit plus demand surge. COT positioning. Overcrowded, overleveraged. Hedge funds underpositioned. Follow through. Day 3. Reversal within 1-3 days. Sustained above breakout level. Broader market context. Dollar strengthening. Risk off dollar. Weak. Metals bullish. Silver's current reading EMA. Death cross remains. FX.co. RSI 50 plus. Max ED crossed. Low COT longs section 4. Historical performance. What silver triangles have done before. 9 o'clock 11:30. Before we give a verdict on the current setup, let's look at what silver's symmetrical triangles have actually done historically, because the data is illuminating. Research from a CFTC-based analysis of silver triangles over the past 17 years identified 7 significant symmetrical triangle formations in XAGSD. 6 of the 7 resolved with decisive breakouts. Only 1 resulted in a prolonged failure. The average duration of these patterns was 47 trading days, slightly shorter than the current formation. Breakout direction showed no consistent bias on an unconditional basis. 4 broke upward, 3 broke downward. But here is the crucial conditional data. Triangles that formed during periods of monetary policy transition, like the current environment, tended to resolve upward 67% of the time, and when a breakout was confirmed with a volume surge of 40% or more, the follow-through was significantly stronger than breakouts on lower volume. The average post-breakout move measured from breakout point to subsequent peak or trough was 14.7%. Applied to a breakout around the $84 to $85 level, a 14.7% move implies a target of approximately $96 to $98, remarkably, consistent with the $92 to $100 target zone that multiple technical analysis platforms have independently identified. The 2020 example is worth examining in detail. In August 2020, silver broke out of a symmetrical triangle at approximately $18.50. The breakout was confirmed with strong volume expansion. The RSI was above 50 and rising. The max CD had crossed bullishly. The prior trend was upward. All confirmation signals were present. The result: silver rallied 62% to $30 over the following 3 months. The 2024 example, the most recent before the current setup, is even more instructive. Silver consolidated in a symmetrical triangle through much of 2024 with price around $25 to $26. The breakout in late 2024, confirmed by volume and supported by RSI above 50, launched silver on the most explosive rally in its modern history, ultimately reaching the January 29, 2026 all-time high of $121.67, a gain of 368% from the triangle breakout level. The critical counterexample is the 2022 pattern, which produced a false upside break before reversing. In that case, the breakout occurred on declining volume, RSI was below 50 at the break, and the fundamental backdrop had deteriorated. The absence of confirmation signals correctly predicted the failure. Like silver symmetrical triangle history, breakout outcomes, 2020-26-year triangle type breakout level direction, subsequent move 2020 symmetrical 6-week tilde $18.50 bullish plus 62%, $18.50 to $30, Aug 2026 to $40 $26.00 bullish plus 85%, $26 to $48, April 2011, 2023, symmetrical 10-week tilde $23.50 bullish, plus 27%, $23.50 to $30. January 2024, symmetrical 12-week tilde $26.00 bullish, plus 368%, $26 to $121.67 ATH. February 2026, symmetrical 2H chart, live $80.84 zone, pending target $92, then $100 bull, or $65 bear, stat 17 years AVG, silver triangles, CFTC data, 47 trading days, AVG duration, 78% breakout, 14.7% AVG, post-breakout move, section 5, the verdict and the price targets, 11:30-13:30. Based on the full analysis, the pattern structure, the confirmation checklist, the historical data, and the current macro backdrop, here is the verdict on silver's current symmetrical triangle. The balance of evidence leans toward a genuine bullish breakout rather than a bull trap. Here is why. The prior trend is strongly upward, one of the most bullish in silver's history. The fundamental backdrop, 6-year supply deficit, record industrial demand, COMEX inventories at historic lows, is as strong as it has ever been. The COT positioning at just 5,472 managed money net longs is the opposite of an overcrowded speculative bubble. The RSI is above 50. The MACD has crossed bullishly. Both of these confirm improving momentum at the decision point. The only significant bear signal is the EMA death cross, identified by FX.co, a lagging indicator that frequently triggers just as a decline is ending. The remaining risk is the one always present in symmetrical triangles, the 25% reversal probability. For the bear scenario, the trigger is clear. A daily close below the lower trend line at approximately $77 to $78 would confirm the bearish break, targeting $65 to $60 as the first major support, with the 100-day SMA at approximately $69 as a critical level. For the bullish breakout scenario, Bean Crypto's analysis gives us the specific price cascade. A push above $91 to $92 on a daily close validates the full breakout and opens the door 100 as a near-term achievable target. Extended targets of 121, the ATH retest, and 136, the full Fibonacci extension, become realistic if the rally sustains with rising open interest. TradingView analysts have separately identified 94.93 to 96.39 as the second major resistance zone above the current price. The measured move target for the current triangle, calculated by measuring the widest part of the triangle and projecting it from the breakout point, generates a target in the $92 to $98 range, consistent with all major technical analysis sources. Probability assessment based on all data, 65% probability of genuine bullish breakout toward $92 to $100, 25% probability of extended consolidation without a decisive break, 10% probability of bearish reversal below 77, targeting 65. The key signal to watch is simple. Does the breakout candle close strongly above the upper trend line, and is it accompanied by a meaningful expansion in volume? If yes, it is real. If the breakout candle shows a weak close, a long upper wick, or declining volume, treat it as a potential trap and wait for confirmation. Closing 13:30-14:30. Here are the 3 things every silver trader needs to watch every single day while this triangle is in play. Number 1, the upper trend line, currently at approximately $84 to $85. A daily close above this level with strong volume is the primary bull confirmation signal. That is your trigger. Without the volume surge, it is noise, not signal. Number 2, $92. This is the master confirmation gate identified by Bean Crypto. A sustained daily close above 92 is what takes silver from a breakout attempt to a confirmed continuation toward 100. Number 3, $77 to $78. This is the lower trend line. A daily close below this level would confirm the bearish break scenario and change the technical picture fundamentally. As chart guys put it, and I'm paraphrasing, when this compression finally breaks with strong volume, the resulting move often carries significant momentum as trapped traders exit and new participants enter the winning side. Silver's symmetrical triangle is coiled. The pressure is building. The fundamental case for a bullish resolution has never been stronger. The confirmation checklist is mostly green, but the trigger has not yet fired. Watch the upper trend line, watch the volume, and watch those candle closes. The next big move in silver is being decided right now, and the chart will tell you which way it goes before any headline does. Subscribe for weekly chart updates. Like this video if it was useful, and drop your breakout target in the comments. See you in the next one.